Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, with news that markets are waiting for some highly spruiked announcements from the new US president. In the meantime, banks are showing restraint and caution lending into a Trump economy. Total outstanding bank loans have dipped for 2 consecutive months, with declines in December and January, and that marks the first time in 5 years that bank lending has contracted. US durable orders rose in January by 1.8% and came after 2 consecutive months of declines. Aircraft sales were a key contributor. Backlogs, however, fell. A lack of supply has seen contracts to buy previously owned American homes drop in January, especially in the Midwest and West regions. But prices rose sharply, with the median price up 7.1% from the same month a year ago. And the latest reading of the Atlanta Fed's GDP Now calculator shows that the American economy will grow 2.5% in the first quarter of 2017. In China, their trade surplus in goods is well known, but not so well known is that they run a large trade deficits in services. In January, that deficit in services was $29 billion, although that is a little lower than in recent months. It is, however, dwarfed by their trade surplus in goods, which in January was $74 billion. And here's a story about insurance premiums and interest rates. In the UK, long-term accident victims have been paid a lump sum for their loss, discounted at 2.5% per annum for the period of their expected recovery, on the basis that the time value of money was related to the return on UK government bonds less inflation. But that formula was changed overnight to a more realistic minus 0.75% per annum, dramatically increasing personal injury claim payouts. Company profits will suffer, and share prices have been marked down. Insurers have threatened to raise premiums sharply. The industry wants their government to change the rules to go back to the cosy deal they had. In Australia, there's been a blockbuster $14 billion surge in business profits in the December quarter, led by miners on the back of a resurgent Chinese minerals demand. This data stoked speculation of a turnaround in economic growth across the ditch. It's also in contrast to wage growth over there. And later today, the Aussies will be releasing their fourth quarter 2016 current account data. It might be worth following because most analysts reckon that the deficit could be its smallest in decades. In fact, some are saying a current account surplus could be possible in future quarters. If that turns out to be the case, expect the Aussie dollar to strengthen sharply, perhaps starting later today. In New York, the US Treasury 10-year yield is rising again, now at 2.36%. Oil prices are up marginally, now just over $54 for the US benchmark, while the Brent benchmark is just over $56 a barrel. And the gold price is up a little further at $1,260 an ounce. And the New Zealand dollar starts today at 72.2 US cents. On the cross rates, we're at 93.9 Aussie cents, and against the euro at 68 euro cents. The TWI is still in its 3-week tight range at 77.5. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.